In this market analysis, we're looking at a fresh update from PlanB, who has shared his latest perspective on the current Bitcoin price crash. He recently retweeted two charts he originally posted in 2019 about the stock to flow model. This tweet sparked a lot of attention, which we'll walk through in this video, one step at a time. He tweeted, "Now that everyone is suddenly panicking about the 50-week moving average, I'm reminded of an old tweet from October 2019. Back then, Bitcoin was sitting around $8,000. People were losing their minds over a supposed minor capitulation, and the narrative was that the 2020 halving would crush the market. Meanwhile, I was calling for $55,000. Looking back, that moment feels more relevant than ever. One of the replies to that tweet really nailed it. Someone said, "The funny thing is that the 50-week moving average panic is exactly what you expect before a reflexive move, not after one." And that's exactly the point so many people miss. 2019 wasn't cheap because of a line on a chart. It was cheap because the entire regime was shifting. The halving was approaching, supply growth was falling off a cliff, macro liquidity was beginning to turn, and hodlers' waves were thickening at the lows as long-term holders quietly accumulated. Realized cap kept grinding upward even while price looked boring on the surface. The fundamentals were tightening like a coiled spring. Price only woke up later because that's what price does. It catches up to the underlying reality after the fact, not before. That's why watching people freak out over a single moving average today feels so familiar. These kinds of panic moments tend to show up right before major reflexive moves, not after the market always looks uncertain until suddenly it doesn't. Today's market structure feels familiar, but not in the way people assume. What we're seeing now lines up much more with a post-washout phase rather than the aftermath of a full-blown mania. Long-term holders are still quietly accumulating instead of distributing their coins, which is usually a strong sign of confidence rather than fear. And when you look at how much time has passed since the last all-time high, as well as how long we've been in this drawdown, the patterns look closer to the early stages of a new bull cycle than the late, overheated blow-off top people like to imagine. Whether you love or hate stock to flow, the broader story hasn't changed much. The power law relationship between scarcity and adoption, combined with Bitcoin's fixed supply schedule, continues to carry most of the weight behind price behavior. The moving averages mostly show where the short-term traders, the tourists, are pointing their attention to PlanB, responded calmly, saying he agrees with the general idea, though he emphasizes that it's the power law scarcity itself that does the heavy lifting, since that scarcity drives adoption and, ultimately, price appreciation. Another follower jumped in with an interesting question. Back in 2019, we were clearly in a bear market, which made it an attractive time to buy. But right now, we're supposed to be in a bull market, so why are we seeing signals that look bearish? It's a fair question and reflects the confusion a lot of people are feeling, as the market sends mixed messages compared to past cycles, and PlanB didn't waste any time jumping into the discussion. He replied by saying that 2019 shouldn't be considered a bear market at all. According to him, the real bear market was in 2018, when Bitcoin hit its bottom around the $3,000 range. By October 2019, when the price was sitting near $8,000, he argued that the market had already recovered and was climbing back toward the averages we saw near the old all-time highs. In his view, that moment in 2019 looked a lot like where we are today. He emphasized that the true bull market, the phase where FOMO kicks in and everyone starts piling in, hadn't even begun back then in October 2019. And similarly, he believes the full-blown FOMO phase hasn't started in the current cycle either. Another follower chimed in with a skeptical take, pointing out what they saw as a key difference. They argued that in 2019, the market had already gone through a clear bear market in 2018, whereas in this current cycle, we haven't experienced a comparable bear market yet. To them, that distinction makes the comparison less convincing. PlanB responded again, doubling down on his perspective. He said that from his point of view, we did have a bear market in 2022. What we haven't seen, he explained, is a real full-scale bull market with widespread FOMO. Instead, he thinks the price action so far has mostly just been the market catching up to previous all-time high levels, not entering a brand new euphoric phase. So if you have kids or a young family, make sure to teach them about Bitcoin as early as possible, before it's too late. This Bitcoin Teen ebook is the perfect guide to get started, providing simple explanations and practical tips to help young minds understand and navigate the world of cryptocurrency. Link is in the description.